I want to ask you first, what did you see in this situation that caused you to conclude that you would have to take this radical and very expensive step?
Bob, let me just correct you on one thing. The Iraq War was expenditures. This is purchasing assets, holding assets, reselling assets with money coming back into the Treasury. The taxpayer is clearly at risk, but this puts the taxpayer was already at risk for what was going on, and this, I think, will minimize the risk and the cost to the taxpayer. Now, what did I see going on? Last week, you watched the equity markets, the stock markets, which most people see, drop by 1,000 points, then rally by 1,000 points on the news of this program. But underneath the surface, credit markets, capital markets were freezing up. And when the capital markets freeze up, then mainstream American companies have trouble raising money to do their job. Farmers will have trouble getting loans. Small business people will have trouble getting loans. This would then hurt the broader economy, more difficult to get jobs. People's budgets, family budgets at risk, retirement savings at risk. So this was a situation that we couldn't allow to go on, and this was a situation that had its roots in irresponsible behavior, lending practices, people borrowing money that they shouldn't have borrowed. That then a chain reaction to the financial institutions holding these illiquid assets, and when they get clogged up with the illiquid assets, and the financial institutions can't do what they need to do. So what we needed to come in was stabilize the situation. We felt this was the best way to stabilize the situation, unclog the system so that it can work. And then, of course, we're going to need to address the root causes of this and the excesses. We're going to need reforms.
Well, let me just go ahead and let me get that back to that in a minute. But what you sound like you're saying is that the whole system was on the verge of collapse.
I didn't say that. What I said was that the system was clogging up, and it was more difficult for companies to raise financing, and that would have been a much worse for the American public, and that was a greater risk. The public is at risk. And so you started off talking about the costs and what the downside is, and you know, I hate having to communicate this, and I hate the fact that the taxpayer is going to be at risk, but the taxpayer was already at risk, and I think this is going to minimize the cost to the taxpayer. And in terms of the system, let me just say this. We as a people always work through these situations. We will work through this situation, and we have a great country. We will work through it. We will, you know, the markets will stabilize over time, and then we will do what we need to do to clean up the mess.
But let me go back to this, and you talked about this a little in the beginning. Do you see we have no alternative here? And if that's the case, what happens if this doesn't work? Well, I mean, if the Congress doesn't go along.
Bob, this is the least costly path, and I have every confidence that Congress will go along with this, because that doesn't mean everyone in Congress will agree. It doesn't mean that there won't be a healthy debate, but I am highly confident that we will get the authorities we need this week. Because Congress knows this is about the American people, this is about the economy, and we always come together at times like this.